What's up, guys? Welcome back to another episode of the Oil and Gas Startups Podcast. Alex, what's up, dude?
Hey, man. Good to see you. Good.
I can't pronounce the company name.
We get that. We get that a lot. The company is Iapetus Holdings.
Iapetus Holdings. Well, we had a great chat, like for at least probably 30 minutes before you got on the podcast. So I'm hoping we remember half this stuff that we talked about. So what do you guys do at Iapetus Holdings?
So, we're a family office that operates a bunch of businesses. Everything kind of involving energy in any respect, be it renewables, be it services across the board, we can be there to help you. We started about 15 years ago as a really simple energy brokerage company, but, we're a bunch of entrepreneurs and we've taken that further and we've built a bunch of other businesses from that point on to retail energy and what's now our biggest business, which is a field services business.
So energy brokerage is probably not something that I'd say probably at least half the audience probably has no clue what that means. Could you break that down?
I will. So I'll give you some background on myself, and that kind of falls into it.
Yeah.
So, I spent the first 15 years of my career oil and gas trading. So most of my career is at Goldman Sachs. And whenever a trader needs to do a transaction, especially in any over-the-counter market, they intermediate it through a broker. So it's kind of like when you're buying a house, you have a broker, same kind of concept, just much higher frequency all the time, every day. And so our founder, Craig Taylor, who actually was a lawyer by training, saw this opportunity, 15, 16 years ago and started this brokerage business to help intermediate transactions. That's how all of us originally got connected. And it's a very vanilla, business where it's a cash flow business where, you intermediate transactions and you get paid for doing so.
Mm-hmm. So one of the things you said when we were chatting prior was that you guys had a very successful brokerage business, and is that continuing to?
I'm actually the president of that business right now. It's a great business. It runs very well. We got a lot of really great guys. It's definitely, brokerage is one of the oldest businesses in the world, and so it's definitely it's a business we really enjoy, but it's kind of led us down the path to a lot of our other businesses.
Yeah. It seems like you guys are just entrepreneurs through and through, based on our conversation today. So you guys have taken the cash flows from that and just started making a bunch of investments.
Exactly. We follow kind of a different entrepreneurial path from kind of what you see in general in Silicon Valley. We like to build cash flowing businesses that allow us to kind of make decisions on our own. It has limited some of our growth, if you will, over the years, because we're pretty focused on building good foundations and strong businesses.
Mm-hmm.
But so Craig was the original founder of Atlas. And so that was the name of all of our businesses, or most of our client-facing businesses are Atlas something. And so Atlas Commodities is our brokerage business. In 2011, Tej Singh, who I started my career with at Goldman Sachs, he was an electricity trader. He joined up with Craig, and they started taking the free cash flows from those businesses and building new businesses, basically applying our methodology, using our connections, really, we just listened to our clients, and we got quite a bit of an inkling that this is a good extension of our existing business with sales and same client base. And so we built that business starting in 2011. That worked out, fortunately, and that business, again, is growing, still exists today. And our next business, which is now our largest business, was Atlas Field Services, which started in 2015. And really works with utilities to help with their grid. It helps. We do safety work, and we do something called vegetation management, which kind of just helps ensure that the power lines are as safe as possible from trees falling into them.
So with that one, you said it was Atlas Field Services?
Atlas Field Services.
Was that one that you guys saw the opportunity with the clients through some of the other businesses, and then you guys launched this and then, put in, executive management team and kind of grew it from there? Or was this like you made an acquisition, or was this like you, I don't know, found a founder and made an investment?
Frankly, we're pretty bootstrap, old school kind of guys. So, we go out with our clients a lot. We've been in the business overall, oil and gas, energy, utilities, et cetera, for a long period of time. It was as simple as we were out with some guys. They were mentioning a problem that they had heard. We had met some other folks that had small inklings into this space. And no, we started with, one employee putting it together. We've never raised any capital ever for our business, so it's all just held by the management team. And it started with one person, learned a little bit more, dipped in further, hired a second guy, and it grew to 400 people while walking up and down power lines, throughout the country.
So it's 400 within that one company? Or
so that's our biggest business. We're probably about 500 people overall, and 400 of those fall into Atlas Field Services, as well as another company, GCUS, which is the union arm. Some basic utilities. Sometimes you need to have union employees. Sometimes you need to have non-union employees. And so
with it being a little bit of a different model than, say, like private equity, right? Because you said you guys didn't take any money. It's more of like a family office business, but you guys started this. How involved are you in, say, like Atlas Field Services? Like, I mean, are you actively involved? Or you
we
have to, like,
are
split your
incredibly
time?
all the way actively involved every single day on everything. So the way we're set up is we have Iapetus Holdings, and
Okay.
within Iapetus Holdings, which is where I sit, which is where Craig sits, it's a pretty small management team. It's myself, Craig Tej. We have a general counsel, we have credit, we have HR, we have marketing. Pretty small team. We think of it as like a shared services model. I mean, we're nothing like Berkshire, but kind of that kind of model
Mhm.
where we offer our expertise. We help control the finances. We help make decisions. But pretty much we're involved in every single component of all the businesses. Now, what I certainly am not is I'm not a tree guy. I can't walk up to a tree and be like, this tree has beetles in it. Let's cut it down. No. So for stuff like that, we bring in people that have that experience, have been doing it for a long period of time, and we let them give us all the guidance from that standpoint. And where we come in is, you know, all the business stuff, all the other stuff, you know, like
Mhm.
legal stuff, this stuff, you know, so on and so forth. But we are out there in front of the clients all the time. You know, between all of us, we just tag team it. You know, we
Mhm.
don't really have a set formula. Hey, you do this and you do that. We're just a bunch of entrepreneurs figuring it out piece by piece.
I mean, a completely different level. But this reminds me of me and Con like 4 or 5 years ago. And I think that we were paralleling like, I don't know, probably like 4 or 5 things at a
Yep.
time. I think it wasn't like we didn't have any money. We were throwing a lot of shit at the wall to kind of see what would stick. This is one of them. This is the thing that stuck.
Yep.
But, you know, we tried, you know, operating. We bought some wells in Oklahoma. We were doing very accidental technology consulting. That was like something that landed in our lap. I was building a tech startup at the time. There was like a lot of different like moving parts. And
Yep.
it was like, I don't know. It was like thinking about it now, it seems like almost chaotic, but at the same time, it's like there's something cool and gratifying about like seeing opportunities and maybe that other people don't see, or maybe in businesses that are not like overly sexy.
Yep.
Like we talked about, you know, pressure washing earlier,
Right.
like one
Exactly.
of the least sexiest businesses, but
Yep.
it was like really, really cool to be able to build. Maybe we'll get into this on the podcast. I don't know, but I built a little pressure washing business from
Yep.
like nothing to like something substantial, and then just shut it down whenever I didn't want to do it anymore. So I think that that's like really interesting. I think it's almost kind of like, I think if you're not an entrepreneur, the closest thing you can get to that is like management consulting, by you getting a different taste of a lot of different things to where it like keeps things fun and like keeps things exciting, in my opinion.
Yeah. I mean, we call it organized chaos, quite
Yeah.
frankly, you know, and especially as you know, as an entrepreneur, you know, even though our actual, you know, our revenue and these pieces are pretty large, you know, no one is too, we really keep ego aside, and no one is too big or too small for really any opportunity. There's constant new forms of fires coming up all the time. And it's just next man up, step in, I'll take this, you take that. We have a
Mhm.
lot of trust in each other, and we're really thorough. And so we piece it all together kind of accordingly. But a lot of it is just, you know, we listen to what our clients have to say. And you mentioned management consulting. We're kind of the non-management consultants, because we listen to what they say. We don't charge them for that component. And then we go and find the solution and build them that solution. Instead of telling them their problems, we just listen to their problems, and then we actually give them the solutions.
So unpack that a little bit. So you're talking about working with clients and you're realizing that they're having issues, and maybe there's an example of this and how it yielded one of their businesses.
Absolutely. So Atlas Retail Energy is our retail energy business, as it's so aptly named. And so we have very good relationships with our customers there, you know, and they range from large industrial sites to amusement parks to just anyone that consumes a bunch of electricity and is not residential. That would fall into our client base. And with what's been going on in the ESG space, you know, a lot of them are really kind of concerned, focused. What can they do to manage this better?
Mhm.
Now, what a lot of them have done and has not worked out so well is, you know, they go to like McKinsey and they're like, hey, we know we have a problem. What should we do with this? They spend a whole lot of money. They get handed a new set of things they don't understand, and nothing really occurs. Rather than that, we listen to them and we say, okay, well, here's your current consumption. Here's this and that. You know, piecing this together, sustainability is very, very complicated. Like, it's a very nascent business. People don't understand. And so we say to them, okay, well, let me understand your portfolio. We already understand your consumption. I'm going to just show up turnkey solutions for you. So one example, amusement park, they had a whole bunch of land available next to them. Their electricity prices are quite high in this regulated market, and they couldn't do much about it. was like, okay, well, what's this piece of land doing sitting here? And they're like, we don't know. We've owned this for like 50 years and it's just sitting there. So now we're building a solar field on it, and rather than us saying, okay, well, let's throw all these other problems at you, or let's give you 5,000 solutions, none of which you can effectuate. We distilled it all the way down to one presentation. Here are 2 options. This is the one we like. And if you like it,
and you're presenting,
we'll run the whole process.
Are these other solar companies to come in and you essentially like sublease out the land, or you do some sort of like?
So for this one specifically, because of electricity and is a very complicated market. Each state and each county have vastly different rules. For this one specifically, it was we have a bunch of builders of projects that we like. For this specific county, you have to actually own the project, and so they will own the project when it's done. But we found the guys to build it. We found a perfect match for them, and we're able to get a return on equity for them. Because a lot of people are trying to solve this problem. Hey, I want to be green. I want to be all these things, but then you see the costs associated with it, and people associate being green with losing money, and we try to push people away from that as much as possible. We're like, well, there's a lot of really kind of thoughtful ways to do so, but again, instead of giving you 1,000 more problems, I'm going to present you with a simple solution, and that tends to work out.
Mm-hmm. So in that instance, were you presenting them essentially in a brand new business that you guys were?
We had worked, so we had the capability and the expertise, and we had talked to folks about this a large number of times. The world yet was just not at a place where they were really willing to spend the extra effort to get it done. Quite frankly, energy prices were really low. This is like 2020. Energy prices are really low. There's 10,000 other problems going on. There's not the consumer pull to do this. So we had presented these solutions a number of times, and we have the expertise to do so. But it was kind of hard to really push it through. And then the amount of asks we got went just exponential. And whereas we would certainly spend the time and have the information, it went from that to we're doing these now kind of all the time. And so that was us just pivoting. We're saying, listen, we have the intellectual capability for this and we have the knowledge base just in case. But in terms of throwing a ton of resources at it, we don't build it and then see if it comes. When there is a problem, we solve it for you.
Mm-hmm. So where do you spend? So your role is business development, right? And that's kind of the responsibility you take with the team. Where do you spend most of your time? Because I know you said you're president of the trading business. Is it sitting in the weeds with clients and with some of the other partners and just identifying what the new opportunities are, or are you sitting around just thinking about like what new businesses can we start? Or I'm just kind of thinking I'm trying to get in.
It's a great question.
Trying to get inside your head.
It's a great question, and like I get asked that one kind of all the time, and it comes back to kind of your organized chaos or my organized chaos comment from before. Is every single day there's a new set of I hear certain different things from clients. I hear different problems we have. And I'm just like blocking and tackling and also being offensive across all of our businesses. And so, our newest business is a drone inspection business. That's actually the first business that we ever actually made any sort of acquisition. As I mentioned, we built all our business from scratch. We bought this small company, Skynet West, in early 2020. Quite frankly, I knew nothing about drones. I knew they were kind of cool and I could fly them, but there's a big difference between like a $1,000 drone you can fly around and like a $75,000 commercial drone.
Yeah.
So we bought this very small business, and I spent the next 6 months like deep diving into what that is. Spent a lot of time with our operator, military founded company, minority founded company, just like we are as well. Got into the weeds, talked to him about it a lot. What was limiting your growth in the past? Okay, what are you good at? What am I good at? And the things that he was good at, which is actually operating them, I took the rest of the stuff off his plate. I'm like, how about you focus on better operations, better supplies, all those other components, and I'll work on all the other pieces, our marketing strategy, our this strategy, our legal, so on and so forth. And so, and then big thing with drone businesses, you have to get kind of to scale, and you have to perform these big utility jobs or we do inspections on bridges and tunnels. We do utility lines. We do oil and gas lines, kind of all of the above. To really be able to flex up to these bigger projects, we needed a couple more things. And so my solution was, well, we can either hire organically for that, which we thought about, or B, what if I can find a slightly larger but team or company that has all the pieces that we're missing to do that scale. And so I set out on finding some companies, and we bought another company based out of Mississippi, also military owned, called Soaring Eagle Imaging, and we merged them, and now we have Soaring Eagle Technologies. Our plan from here is probably more organic growth, but we kind of wanted to pay to play, to learn a little bit about the space.
Mhm.
And then what we are good at is putting resources behind things that make sense.
Yeah.
And so now that company is growing exponentially, and it's a great latch on or a complementary piece to our field services business, because our field service business is very picks and shovels. Like we have trucks, we have guys in trucks, that we have 400 certified arborists that are going up and down power lines that know way more about trees than I know about pretty much anything. But some areas, and it's a very, our infrastructure is pretty challenged right now. In some areas they get to, think about California, you can't walk to a lot of these places. And like, we're a safety business, overall, and we're really focused on safety. And, we won't let our guys, or they are smart enough not to go into areas that are dangerous. So, what's a solution to that? Well, let's pair them up with a drone guy who, when they get to a place that's not accessible, he can pop his drone up, fly it over. And again, from that safety angle, they're using helicopters right now. I think Kobe most of all brought to our attention how dangerous helicopters are. They are very, very dangerous, especially if there's smoke or fires. And so we just, we hear our clients, what matters? Safety, checking our infrastructure, more cost effective, all of which we're checking all those buckets. And again, instead of telling them their problem, which they generally already know, we're saying, hey, we're doing this already. Here's something additionally we can do that can also improve all the standards you need. And we're not going to get paid for telling you that. We're going to get paid for doing the work for you.
So are most of your businesses complementary?
I think we like to think that, yes, they do have a lot of they're all energy related in some capacity. And so, we're not going to go and start a company that there's a lot of really smart people out there who are doing a lot of really interesting things. And so we know what our background is, my background, oil and gas, electricity, infrastructure, same for the entire management team. And so we want to do things where we know what we're doing, and or can even kind of, quite frankly, cut through the bullshit when we're hiring someone. And someone can sell you all the bells and whistles you want, and even on drones on the front end, the guy can say pretty much anything to me, and I'm like, yeah, sure, that sounds reasonable. And that's why we deep dove and got into it. And so really for the sniff test, we stay within a space that provides cross-selling or some other way where one business in some capacity helps better inform us for those other businesses. Because just like trading, what I always told people is trade something when you have edge. If you don't have any edge and you don't offer anything, you're probably like the dunce in the room. And so try to avoid that as much as possible.
So energy is the common thread. So you're not like we talked about, Colin and I love car washes. So great cash flowing business, but that's not like y'all's thesis, like it should be.
I mean, we do. So, what I was talking about thus far, so we have, Iapetus Holdings, and then within that we have these operating businesses. And so in terms of the ones that we are going to be actively managing, there happens to date right now, there's so much opportunity there that we're like, okay, well, let's continue to put it into that. Yeah. Now there are times where that is less so the case, and there's times where that's more so the case. And so we fortunately have been a very positive cash flowing business pretty much from the start. And so we also have, an investment arm that's kind of separate from the business where we will strategically invest in things like real estate, or we would invest in a car wash business. But we want to invest in businesses we understand, and they tend to be cash flow businesses, or at least good pathways to cash flow. We're not generally in the camp of, hey, let's just unlimitedly raise until, we go public. And there's other companies that are better at that than we are. And we don't want to compete with people that are better than us. We want to be better at what we're doing. Yeah.
So you guys do make investments, but it's just kind of like random things that you understand.
Yeah. It's random things where we think that we can add value as well. As like starting companies, that if you're going to welcome someone into your business or onto your board or something like that, we're not, we want to be able to help them be successful, because there's no shortage of money out there. And we don't really want to be just the passive person on the side that writes you a check and then we're gone, because we do think we offer some expertise. And so we want to be partnering with folks that we can help them. They also can help us. Like we love it when they have skill sets, which is very common, that we don't have. It makes us smarter in the area as well. We make them smarter. We can maybe help them with some of our shared services. And so we just want to continue to add value to the people that we're investing in.
So outside of the stuff that you guys are either, you own or you're invested in currently, kind of looking out, I'm kind of curious to see what you're seeing, out there right now. Are there any other types of businesses or certain sectors that you feel like you're really excited about, where there's a lot of opportunity?
Yeah, I mean, the area which is just such, we were talking about this a little bit earlier, like, there's all this kind of conception that like oil and gas is one area and, utilities is a different area. We think of it as a full energy spectrum. And, that's the biggest business in the world is energy. And so,
Amen.
So we think that like thinking about that holistically, which I think a lot of retail folks do not, and where we can kind of help oil and gas through the others, through renewables, or we can help renewables through oil and gas. It's just energy to us. And so, within that, we have a lot of folks, just because of where the growth happens to be, that, are in oil and gas, but want some help with some, renewable aspects that we're pretty helpful with. So I think anything in the environmental remediation space, which is basically, cleaning things up or doing things a certain way. Safety work is an area that we feel like we've just tapped a sliver of, and our field services business really is just a safety business. We go and we make sure you did cut the tree. We go and make sure that we don't spend a lot of money on large CapEx. We don't have a bunch of cranes. We have mostly trucks, and where we spend the most of our money is on our people, and we want to focus on high margin, high quality people. And so that vertical is 10 miles wide, and that's the area for us where we feel like we can expand the most.
So let's play. I've never done this before.
Yeah.
But since Colin's not here, we're going to do it. I'm just going to say a word, and you say, are you bull or bear?
Okay.
Okay.
Yep.
Crypto.
Bull.
Bull.
Yeah.
Bitcoin specifically.
I would say I'm more of a Bitcoinist, so more bull to that. I overall, I think it's all just a big experiment.
Mm-hmm.
I do think that we will have ongoing store of value, but the question is very interesting because the last 2 weeks are certainly testing it. I'm bull.
It's resilient.
It's very resilient
compared to 2017, 2018.
Yeah, I mean, like we still have to see, a little bit. Like it definitely is an experiment. So I'm definitely not like a Bitcoin maximalist where I think, hey, you have $1 billion and you have it all in Bitcoin. I think that is absolutely insane. I do think that the technology offers a lot of very, very interesting things, and the financialization of currency and the decentralization of currency does make a lot of sense. We're printing a lot of money. There's a lot of government things going on. So I think there's a lot of value to the technology, but I think I would put it as a percentage, small percentage of a portfolio, even just to learn about the space. We're pretty connected to the space as well because they consume a lot of electricity. And so we have a lot of clients that are miners and these kind of folks. And so that, it falls into, do we have edge in any sort of knowledge in the space? And we help supply a lot of those guys with electricity.
NFTs?
Bear. Yeah.
Metaverse?
Bear, but mostly because I don't want it to be a thing. Like Zuckerberg's concept of what the world should be like is very far from my concept. Now, that does not mean that it's not going to generate a whole bunch of money and become really popular. I just don't want that. I don't want Ready Player One to be the world that I'm living in. And I like people. And that to me is not the best way. I like sitting in person. Like COVID hurt a lot of people in a lot of ways. It was horrendous. The social impact of me not being around people was very detrimental to my day-to-day mood.
Yeah,
my lifestyle.
I agree.
Like it was very painful.
Believe it or not, nobody believes this. I'm actually introverted. I have to turn on the extroverted side of me, but like when it's not on, like I'm totally content just being in my head and just thinking and being alone. I enjoy that, like traveling alone, being in a room alone, like all of that. Totally cool with it. But COVID hit, and I'm like, I was craving just like not even talking to people, just being in a room with people and just like feeling people's energy, because you're just like, I don't know, you're just like stuck at home for extended periods of time. You're just like not seeing anyone. You're not going to the store. You're not going out to eat. It's a little weird. It was a weird feeling.
It's the most human thing is social interaction. Actually, one of my favorite books is a book called Sapiens. Talks about how there were a whole bunch of other kind of competing humanoids, whatever, hundreds of thousands of years ago, million, whatever the time is. And we weren't actually the smartest. The thing that really differentiated us is our ability to work together and our social interaction. And that's what allowed us to kind of become the dominant species that we are today. And
so you're saying that there was a lot of other like
Homo erectus, and there's all these like, it's Homo then Sapiens, but there was like all these other kind of human Neanderthals, that lived, they believe, some of them commensurately at the same time. And a lot of argument, even though you say you're a Neanderthal, that's negative. that's more because of the look of them, is that they were actually belief that they could have been more intelligent than us, but they did not work together, and their vocal cords were not as developed as ours. And so what made us today, and look what we built in this world today, is no one can do anything alone. Like, and so our ability to work together, our ability to interact, though right now these days it does feel like people are very far apart. In reality, the most human thing is social interaction, and it's core. And so I feel you. Like, you're sitting at home, you're like, I just want to have a coffee or a beer.
Well,
with someone.
Seems decisive, but as we're seeing with this whole Twitter thing play out with Elon, it could just all be bots the whole time. It could just be China and Russia sowing dissent via bots, because there's already proof of that on Facebook.
So much
with a lot of like the big Facebook groups are actually run by like these state-run organizations that are coming in. Like, I think it was like 8 out of the 10 like top Christian groups on Facebook were run by Russia.
It's just, I mean, that goes back to your metaverse question, where I'm like, guys, can we just maybe like sit down and have a beer together and talk in person? So I know that you are there, and we can just kind of figure things out. And I do think that ascension of social media has led to why, people have been pushed more into these groups, and people can't work together anymore. Because, you sit down with someone, you have a conversation. I tell my employees all the time, I'm like, he's like, I sent an email and they didn't respond. I'm like, how many emails people get? Obviously email, podcasts, all these things are very valuable, but they are tools in the toolkit. I'm like, did you try picking up the phone and calling him, or did you try setting up, and go and have a beer with him? And I think we're losing some of that skill set. I think we need, just like energy, we need all forms of energy. We also need all forms of communication. And if we get too much into one, then we lose out on the others.
Dude, that's 100% spot on. It was one of the things that, especially being an introvert. And I remember, 2013, kind of getting out and just kind of getting involved in like the Houston kind of entrepreneurship scene, getting involved kind of in the energy scene. There was nothing back then.
Right.
There was nothing back then. I don't want to toot our own horn, but I feel like we've definitely changed the kind of the landscape, and just giving people more of a venue and a platform to do these kinds of things through the conferences and through energy tech nights. And back in the day, it was just like happy hours. But man, back then there was like nothing. There was like nothing going on. But just showing up and being like, "Hey, I'm just going to figure out how to talk to people."
It was just it was an industry that needed change. And so that's why when you piece it all together, again, that was too much in one direction. It's just happy hours, versus it's all just kind of platforms. I think we have so many tools. Like, if I'm building a house, I don't say, well, I have a hammer. You need a bunch of different tools. And I think sometimes people get too down the path with just one, whereas we should be using every single tool that is available to us at all times. I mean, Houston, so I'm born and raised in New York City. I moved here in 2011 to open our office. And, I love this town. I don't plan on leaving. I'm such a New Yorker that my friends could not believe like what I'm saying, but I've been here for almost 12 years and I'm not looking back, and the way in which the city and the state has evolved is fantastic. And I think kind of some of the things you're talking about have played a really big role in that. And the sense of community that really has evolved in Houston per se is fantastic. And we're not just like what many people perceive. Okay, this is an oil and gas city. We are a so many things city. And now that we're kind of talking more across each other in a productive way, I think that the runway is fantastic.
A big goal for us is to continue to, we've always been known as an oil and gas city, but I think for us, it's really making sure that everybody knows that we hold the crown for the energy city moving forward. And I think with a lot of the, especially conferences and stuff that we had talked about, the one in October being a big part of that is just like, we are the Mecca for energy, and just really solidifying like no one, like it's not Boston, it's not Denver, it's not Austin, it is Houston, and it will continue to be Houston.
The most innovative industry in the world is the energies, oil and gas, et cetera, industry. People think it's so easy that we casually have 100 million barrels a day coming out of the ground every single day. It's not only that, it's getting to the right places. It's complex logistics. I made the joke earlier. This is not like Spindletop and we're like shooting a gun in the ground and oil is gushing out. This is super complicated, unbelievably hard problems to tackle. I mean, they have survived so many different cycles of boom and bust. I mean, think about 2020, oil going negative. If they're able to survive that and the innovation that exists there, when we talk about things like climate change or other just global problems that we have, there is no industry that can solve that other than the energy industry.
Mm-hmm.
Silicon Valley does a lot of really interesting things. You cannot SaaS your way to a solution for this. You need engineers, you need the talent that exists in this city. And something I love so much about this city, it is so commercial. Like if you come from oil and gas at all or energy at all, you are generally a commercial person because you're usually betting on yourself. You're wildcatting. You're doing this. It's really, really entrepreneurial by nature, and I think that sometimes gets lost from outside of the city, outside of the state, and something that we really need to focus and hold on to.
I think you're spot on. I think that I think it's maybe the hubris of Silicon Valley, of people that, especially right now, especially with anything having to do with this climate change or quote unquote climate tech, whatever that means.
Yep.
Or anything with carbon, you're just seeing just a ton of money flow into it, or at least over the past, let's call it 6 to 12 months. That's changing
really
now.
Like COVID, it was like COVID happened, and then people started to have a sense of community and how global things are, and like these conversations were happening. But yes, since then and us coming out of that, it's just been parabolic.
Yeah, but I say that to say that I think that a lot of these solutions, and I mirror your sentiment, a lot of that innovation is going to come from within the energy industry. Spot on. I think that if it came down to a company that's raised $200 million with absolutely no energy experience planning to tackle something around climate change or carbon or something like that versus somebody who's raised nothing, or maybe it's bootstrap, but they come from energy and they have like deep domain expertise, I'm betting on the latter.
I couldn't agree more. It's a totally different industry than the tech industry. Not that we don't use tons and tons of technology, just in terms of the concept and also the complexity of the energy system is so hard for people to get their head around. I've been doing this for 15 years and it's still hard for me to get my head around it. So there's so many little components, so many different pieces you have to piece together that you have to understand kind of how it works to even understand how you're going to have any solutions. And you also have to know that, there's not one switch that can be flipped. It's going to be 50,000 switches that we're going to flip. And that's how even the oil and gas industry is built. We don't have like one well somewhere producing 100 million barrels. We have tens of thousands of wells, like be it in like Siberia or be it in West Texas, like they're all over the place. And somehow when you get to a gas station, there's gasoline there, and it's not so easy.
Speaking of that, I mean, we're sitting at, the highest gas prices we've seen, I don't know, in a long time. I think
ever. This is actually we're actually higher now than we were. I was trading in 2007 when we hit the all-time high, and that's oil hit an all-time high there, 147. Gasoline, and what made it seem like kind of bearish at the time, or that it was just kind of like a short covering rally, was gasoline was sitting right on top of oil price. The gasoline crack, so the price difference between gasoline and oil, is like $50+, which means what that means, for people not in the space, is the demand is there for the gasoline for the time being. And we have not really been investing in refining and refinery expansion. So it's right now, it seems like it's a product-led rally. It's really just the, inventories for gasoline are super low. Inventories for diesel, distillate.
We're also removing, I think we're removing Russian oil and gas, right? And then we're also removing Russian refined products like gasoline.
That's been actually a bigger problem so far. At least removing their oil is a problem, but the US SPR is just oil. International SBRs do have products in it, but that's like what used to be when you're trading. You're guessing about like do we have 1% too much oil, or do we have like 1% too little oil? And that could draw it because commodities price on the last barrel. And so when you think about how oil got to -40 whatever, we just had a little bit too much. There was no spot to put it, and so it goes unlimited down. Same thing on the upside. You don't have enough in the short term. There's no solution to that. And when you're talking about a country that is the second largest producer coming offline, do I think there's long-term solutions to that? There are a bunch. Are there short-term solutions? No, it's going to be chaos.
Yeah. So let's talk about that. Do you have any kind of projections on anything kind of coming down the pipe? Because it doesn't seem like anything's necessarily changing. The Biden administration has flipped back and forth between we want to do this to hopefully maybe drive down some gasoline price. It always revolves around like federal leases and stuff, which I feel like is a scapegoat. I feel like it's a small part of the conversation. I do think there is some truth to that, but then they're also talking about now we're going to import more from, I don't want to say like, maybe it was Venezuela.
Well, they then also yesterday just said no to Venezuela. So
okay, so like
it's definitely just a lot of blind leading blind going on.
Yeah. So do you have any? Is there anything kind of coming down the pipe? I know we're not as far as I know, we're not building any new refineries. A lot of the investment in the existing refineries to kind of keep them up in kind of tip-top shape was lacking, but obviously due to the last 10 years of just absolutely no capital being returned, it's just all that capital was completely incinerated. Things have changed. Like nobody was being rewarded for production growth. Nobody was rewarded for investing in refineries.
Right.
And so I'm thinking about it. It cost me $100 to fill up my Jeep this morning.
Right.
Right. And I'm like, all right. Love the fact that oil is at, $110, $111 currently. Nat gas is at what? Probably $8.
$8. That's almost even crazier.
Hate it at the pump. And then if I'm feeling it, I know that a lot of people who are less fortunate are like really, really feeling it. And so I think that's a big question for a lot of people is like, what is on the horizon? Like my wife's been asking me, she was like, do you know anything in terms of like, and I was like, I don't see anything changing.
Yep.
In the short term. I see the price even going higher. I saw an article yesterday about gas stations actually preparing for the first time ever to do double-digit gas prices. I mean, you think about it, you got those little placard things that you stick up there, and there's no slot for like $10 gas, you know?
Right.
But if it gets to $10 gas, I mean, I'm really going to have to be thinking about like where I'm going.
Yeah, there's a lot of things to unpack what you said and a lot of very interesting things. I mean, I think unfortunately, what all these administrations in general do is they go to the lowest common denominator, and there's not really any sort of problems being solved. To solve these problems, it requires just like solving, a climate or anything like that. These are really, really complex problems where you need long-term solutions. The U.S., biggest energy producer in the world, doesn't even have an energy policy, and so people are having to make all these short-term decisions. Now, do I think leases is a component? Yes, but then if you have the leases, you don't have pipelines. And so there's so many pieces and components, and nothing can be fixed, in a week, in a month, in a year even. I do think that if we work together over years, there's a lot of solves. Canada came out and said they could produce 900,000 more barrels of oil, with the right kind of components. And so, you add that all together, there are a bunch of little solutions. Now, what do I think we are trying to do to try to temper this is you look, I think the Fed was pretty behind the eight ball in terms of talking about how transitory inflation would be. They added more. We had a supply problem, not a demand problem, and the government continued to kind of accelerate demand instead of kind of think about supply, and so that actually made the problem even worse. And so, with interest rates going higher, the first kind of easiest solve, which is not a great solve, is we push ourselves into a recession, globally or domestically, and there's a very high correlation between demand for energy-related products, and economic growth. So that's kind of the elephant in the room is that going to be what we're going to solve here? We've never not had a recession following a doubling in energy prices. Now we are a very big producer. Never. Now, listen, that's a long, in 73, we're a major importer, and so whereas today that's less so the case. And so it really, from 73 and beyond, people forget that the U.S. was kind of the OG of dominance in terms of oil production. 20s, 30s, 40s, we were producing unlimited amounts of oil. That started to abate. We had peak oil concepts, which is not a real concept. We have unlimited oil in the ground. And then we became a massive importer. And so in 2007, when this occurred, and we had these prices, we were the largest importer in the world. Now we're, give or take, an exporter, especially if you take Canada into account, which one probably should. We're a pretty big exporter. But there is no refining solve. There's just, can we limit demand in some respect? Otherwise, I think we'll continue to see this. Now, what's also hard is think about how many people bought trucks and cars and et cetera in 2020, 2021. F-150, awesome car, is one of the best-selling cars, maybe the best-selling car in the United States. When you have really big volatility, people see, okay, I'm paying $1 a gallon. Well, you go and you buy. You don't really worry about it. Now we'll see the reverse, but these things take such a long time to really solve. So barring really some sort of economic pullback, I think we're going to be in a pretty high energy price environment for the foreseeable future. I don't see, nor do I think this Russian thing should go away. You think about Germany, you think about these countries, how reliant they are on this country that is not necessarily particularly friendly to us. This is going to have very long-standing impacts. And so barring a recession, I think we'll be in a situation for a while where we're trying to shore up and fix a lot of these components, and that'll just take a lot of time and money. But I also have no problem, by the way, with the oil and gas industry making a bunch of money. They should. It's not like they're not setting the price of oil.
Yeah, that's the most asinine thing. I was actually gonna. Me and Colin are going to do a TikTok competition, so go follow me on TikTok. And I don't even know what my handle is because I haven't put anything out yet. We're going to see who can get to 10,000 followers first. And I was going to make one on price gouging is what everybody's saying in the headlines. And you're seeing a lot of like senators and just people in Congress just talking about like, oh, the oil and gas companies are just, you know, padding their pockets. And I'm like, if they set the oil and gas prices, why would we endure what we endured over the last 10 years?
Why was oil minus if they're the ones setting the prices? I mean, that's kind of gets back to you're talking about how are we going to solve this? Well, there are tons of solutions. It's just that it requires people sitting down, understanding it's complex, and working through this piece by piece, which requires, you know, again, all sides sitting together and trying to, you know, it's 1,000 solutions. You have to do a lot of these different solutions. But yeah, I mean, Exxon, whoever, these guys are not setting global oil prices. So this is supply demand. This is, again, you can't just, it's not a spigot you can just turn on and turn off.
Hit that more production button.
Right,
yeah.
Right. And, you know, and quite frankly, they have to be responsible. Their responsibility is to their shareholders. You know, this is one of the best things about the United States is we are a privately run country. You know, if you buy some land, you own your mineral rights. You're incentivized. Okay. We are not Russia. We are not Saudi Arabia. Thank God. And so when you think about all those pieces, it takes time, it takes incentives. And if you're pulling something out of the ground and you're converting it into something, you know, you shouldn't be converting it into something that is worth less than all the money you put into the ground, you know, and it
100%.
takes time to shore that up. And, you know, if they can work together, are there ways where long-term, maybe the profits, quote unquote, are more moderated? Maybe, but, you know, let's at least try to figure out what the problem and what the solutions are first, and then we can worry about that other stuff later.
Well, I think it's safe to say we're going to ride this boom for probably quite a few years.
Yeah.
You know, who knows exactly where we'll end up? Is there any way that, I mean, you said that, especially following everything that we've seen recently, we've never not had a recession. Are you able to quantify how big or how terrible this next recession could be?
I you know,
there's a lot of FUD out there. And it's like you never really know how bad will it get. And I think that just a few things over the last few years, you're like, oh, like life's pretty good. And some like bad shit happens. Like the hurricanes happen. You're like, oh shit, like half Houston is underwater. And then like the freeze happens. And then like a bunch of people die in Texas because we don't have like heat. That's absolutely wild.
Right.
The pandemic happens and you're like, what the hell? Negative $47 or $37 oil, whatever it was. How bad does this get, do you think?
I mean, that's a question I could spend like 10 hours kind of talking about. It really depends. I'll put it this way. I don't think that we are, having lived through and traded through kind of 08, you know, I don't think we're in anything like that sort of category. Like, I don't think we're talking about, it's a very, very different situation than it was back then. I don't think there's a lot of systemic, overwhelming kind of concerns as much as, you know, the Fed just has a blunt instrument and they're really trying to temper demand, and the only way to, and they're trying to protect. I mean, listen, the bottom 50% of our country is really suffering right now. And, you know, if you know, there's some stats where something like 50% of the population, if they have $1,000 medical bill pop up, they're going to go bankrupt. You know, that's not good. And so when you have prices going up this quickly, gasoline prices, food prices, all across the board, you know, something needs to be done to protect people that, you know, we drive a lot as Americans, and it's having a pretty big impact. So, you know, I think the economy overall is actually fairly healthy. There's 11 million job postings out there. You know, it'd be great if our participation rate could get higher. You know, it's still very low. People are not really getting back to work yet. So there are some solutions where if people just, you know, started showing, you know, going after some of these openings, I think we can temper it. So I don't think we have a systemic problem. But I do think if we're not in already a recession right now, I mean, what first quarter was negative GDP. All a recession means is it's all these economic terms, right? All a recession means is 2 consecutive quarters of negative GDP growth. Is it possible this one was negative?
So we already hit. We
had
the first quarter.
First quarter was negative GDP.
Are we on track for negative GDP in the second quarter?
You know, like it's hard to say. It's going to be kind of close. I think probably it's probably more of like a 2023 kind of issue. But getting back to kind of the oil price thing, you know, inventories remain extremely, extremely low. Now, are there a ton of factors? There's always like big headwind factors that can either be supportive or negative. Like, you know, if you could answer, is China going to stick with the zero COVID, you know, crazy policy they have going on or not? You know, so China is the largest consumer of energy in the world. Say we lost, you know, there's 100 million barrels rounding of demand and supply every single day. China with their shutdown turned off 1.5 million barrels a day of demand, and so that offsets some of this Russia pain that we have going on in terms of loss of supply. They say, who knows, whatever they say, but they say that they're coming out of that now again. And so there's just these big thematic issues that will be pretty impactful. I don't think Venezuela is coming back anytime soon. I think the Iran thing is going to be a lot of just talk back and forth. I don't really see that coming back soon. But what kind of concerns me to the upside in pricing, because it is a supply problem, is you think about the Arab Spring in 2011. What led to that? It was a tripling of prices of wheat. Almost all of the grain that goes to Egypt, that goes to Saudi Arabia, that goes to the Middle East, comes from Ukraine and Russia.
Mm-hmm.
And so we have not even felt that problem yet. Prices are higher, but we just missed the planting season. So the vast majority of wheat that got planted did not get planted in Ukraine. I think they're saying at least half the crop didn't get planted. And so there's a lot of things that could go wrong.
That's the scariest part to me, I think, especially seeing complete runs on, the grocery stores and going over the last couple of years and being like, I can't buy meat. Like there's nothing here.
Right.
And the shelves just being completely empty. And so, gasoline prices is one thing. Being able to drive around is totally a luxury. It's not necessarily essential. I mean, you got to get to work, but maybe you can work from home. Eating is absolutely essential.
You definitely
need to eat. And we're seeing this, this baby formula shortage. Maybe that's a totally different problem.
That's like an Abbott specific kind of plant thing. But what it does come back to is resiliency. And I think what we hopefully are learning the lesson of is you need to have some resiliency baked into your system. And if we're looking for positive outcomes from COVID, what I'm hoping is some of the positive outcomes is we redomesticate a lot of our production and safety lines, because things that are critical we should be making here or be making with someone that we know is a close friend of ours and is going to support us. And maybe that's South America, maybe somewhere closer, somewhere that we got to help out, as well as domestically as much as possible, which is actually starting to happen. Like one of our customers is manufacturing a whole bunch of lettuce type things and so on and so forth. What we've seen is historically everyone always thought that we must build as large scale as possible and then disseminate it out. With technology advancements, you can actually build a lot more small scale projects that are much closer to your supply homes, and they're economically competitive, especially with gasoline prices where they're at. And so I do think that we're going to continue to see this rebirth of manufacturing in the United States, and we should do everything we can to support it.
I think we have to.
We have to.
Especially looking at what you just said of the lower 50% of Americans today are really struggling. And then you look over at China, and they've literally brought more people out of poverty than probably any other time in history before.
Which I think they owe us quite a bit for. And, we don't, it's like the United States in the 70s when we kind of opened up and China opened up and we brought them in to our country, into our economic system, if you will. The U.S. was by far most dominant country in the world in the 70s. Now, I'd like to say we still are. I'm not a big fan of that people saying that we're not, because quite frankly, it's the best country in the world, and we still very much so are. But what we did do was we opened up this whole economy. We exported jobs, over to them to do work that we weren't really doing here, and that led to this disinflationary cycle. Like, why did prices in general kind of on everything decline from the 70s up until very recently? Likewise, when you look at why was the Fed able to print so much money in 2008, 9, 10 and keep that going through a very strong economy, it's because you had all this disinflationary impacts coming from exporting manufacturing. And so part of the difficulty is, prices will go up if we can do so. But I think if we have some national unity and focus on, supporting each other, there's a lot of really good long-term things that can come from it.
I think that would be like, it doesn't seem sexy, which is why I think I would be interested in it, but just like investing heavily into like just the manufactured here in the United States. You're seeing more of it with like micro brands, particularly
it's really
clothing brands or, I think of guys like Jocko Willink, and him building Origin and all these other veteran kind of owned and run businesses where they're putting a lot of veterans to work and they're doing a lot of things that would normally be exported to China. I think we'll see a lot more of that.
I think we'll see a lot more of that. I think that's, if we're looking for a positive to this inflation, I think, and or higher energy prices, like it means that the transportation and the cost to get it here, it was like $2,000 a container and now it's like $25,000 a container. And so, as we start to see, okay, well, not only is it maybe price competitive, but also like you can get the things when you need, you're supporting American jobs, then they can spend more money, so on and so forth. And so, I am overall pretty optimistic about the future, if we can kind of come together and work together and focus on the things that really matter.
Dude, this was a hell of a conversation.
Thank you so much. I appreciate it.
I love it, man. All right, guys, if you like this, hey, send it to your friends. We went totally off the rails, but I love it. It was it was such a just a flowing, I don't know, just deep dive into life, man. So send us your friends. We'll catch you guys in the next episode.